Chris Gilmore from ABSA Private Clients. Let's hear what he has to say. Chris, stimulus is taking place, Asia, Europe, wherever we look. People are printing money. Sounds to me like a currency war.
Yes, although I don't think we're going to see a repetition of what we saw a few years ago when we saw money flooding into the likes of Brazil, for example. They responded with Tobin taxes, this type of thing. So I think that's unlikely. What I think we're seeing here now, Gunter, is a situation which was unexpected. I mean, even as recently as a week ago, I don't think most people honestly believed that China would come in with a stimulus package. Because the Chinese authorities particularly were adamant.
They've said it.
Yeah, that they could sort this thing out. And they were quite happy with the way things are going. What it tells me is that they're now getting a bit worried that growth is now tapering off. And you can say what you like, at the end of the day, China is a command economy.
Yes.
With large elements of free market here, there, and everywhere, but it's a state capitalist situation, and it obviously has concerns that if growth peters out to a certain extent, you run the risk of certain people having had something having taken away from them might get a bit aggravated by that, and there could be some social unrest in parts of the country. Also, I think they're realizing that the one-child policy is now having some very serious economic effects as well. So their ability to get back to those lofty growth rates of 10, 11% that we had a few years ago, I think they're all but gone. So they're going to try and preserve, by whatever means they can, this 7 to 7.5% range. But back to your point about currencies, I think it's interesting. If you look at the rand's been remarkably strong in recent weeks.
Actually the rand, when I think of it in global context, it's a bit like a football, isn't it?
Yes.
And it gets kicked around. Which goal is it going to end up?
Well, precisely. And I think it's catching two positives at this point in time.
Yeah.
One is that I think most emerging markets are perceived to be on the verge of raising their interest rates, because the Fed is probably going to raise them in the middle of next year. Now, if that perception holds true, and we do get the Fed raising rates by the middle of next year, then emerging markets will feel duty-bound to raise them in anticipation of that, because they want to attract yield seekers to their markets. So that's the first point. But secondly, I suppose, once you have stimulus, once you have this kind of risk-off situation materializing again, you're getting attraction going away from the dollar and into these emerging market currencies. So the rand is conveniently placed, in my opinion, into the emerging market space, and it's catching that positivity. Got to be careful here, though, because we're approaching the end of the year, and we may be in for another downgrade from some of the ratings agencies. We've had the situation with Eskom, which I think is going to severely impede our ability to grow anywhere near the kind of rate that we have to grow. I mean, we should be growing at, 3.5% at least, and we'll be probably lucky to do 2% again next year. So I think when reality sets in, amongst overseas, but among global speculators and investors, you might just see some of that optimism being taken away.
Eskom is one of those. Netcare numbers, let's talk about that rather. That's a bit more positive. Will the growth story continue?
Netcare has been very clever and very innovative over the years, and particularly with its move into the UK. If you look at these numbers, interestingly enough, if we strip out, and we'll go back to foreign exchange here again, I think they got a big boost from the fact that the operations in Britain were helped by the weak rand.
Yeah.
But if you look at what's happening in the UK, the NHS, the National Health System, that's under severe pressure, and it's constraining the ability of some of these private operators to do what they actually want to do. So that's having a little bit of a dampening effect there. Locally in South Africa, actually going remarkably well, but also against a backdrop of power interruptions. Now that's a major problem for a hospital. If you've got an interruption to your power supply, you've got to make sure that your generators are kicking in seamlessly and effortlessly all the time. Because if you're in the middle of a sensitive operation, the last thing you need is for the lights to go out so that the surgeon can't see what they're doing, this type of thing. So that's problematic for them. And of course the costs in terms of things like electricity also rising significantly as well. But all in all, a good result, and I think provided they can find these areas like the UK into which to expand, I think also there will be more opportunities in South Africa as the realization creeps in that NHI, as the blueprint was a year or two ago, probably isn't workable. So I think the private hospitals will have to be brought more and more into the state system purely because of necessity.
Either it's going to become more expensive for everyone else, or it's going to become cheaper.
It's going to. Healthcare is going to be expensive wherever you are, anywhere in the world.
Okay.
It's getting progressively more expensive. Even in the UK, where the Conservative government is busy, in many instances, dismantling parts of the national health system. I think that's going to make it more expensive. More and more people there are going to be inclined to go the private route. So healthcare, the golden days of free healthcare, other than a few places like France and some Scandinavian countries, and maybe Canada, not what it used to be.
We should be getting tax rebates for staying healthy. But let's move on. Pioneer Food. Food manufacturers as a whole, I imagine, are not doing too well. So if you look at Pioneer, what's the outlook for you?
Pioneer, they've got a remarkably good stable of brands. Unlike Tiger, which also got a great stable of brands, Pioneer hasn't gone into Africa in quite the same way as Tiger. And it hasn't obviously made the same kind of impairment costs as Tiger's done in places like Nigeria. So it's stuck to his knitting largely. And you see the set of results, HEP's up, 47%. That's a remarkably good result. Look, we're coming from a relatively low base. Let's not forget the problems they had with the competition authorities only a few years ago. So things, I think, are looking an awful lot better, and provided they stick to their knitting, to the staples that they know, and I said, those brands are very, very strong indeed. So I think Pioneer is actually not a bad one.
We've got a minute left, so I'm going to ask you about Sasol and the oil price. I mean, not so long ago, I was told by Sasol themselves, they don't concern themselves with the oil price so much, but I don't think they'll say that to me today, will they?
Probably not, no. Look, bear in mind that Sasol is probably twice as sensitive to the impact of the rand-dollar exchange rate as it is to the oil price.
Okay.
So I think the diminution in the share price that we're currently seeing is probably due more to the strength of the rand than the oil price. Obviously, the low oil price is not good for them. But I think bear in mind that we're probably getting now to the point where we're getting very close to break-even oil price in terms of extraction cost.
Yeah.
So I'd be very surprised if we see the oil price going much lower than this. On the other hand, I'd be very surprised if the rand didn't weaken from current levels. So I think Sasol probably will reap the benefit of a weaker rand-dollar exchange rate in the not-too-distant future.
Something to put a question mark on. Thank you for your time.
Thank you.